Welcome to CLS's quarterly market outlook for the fourth quarter of 2017. I'm Ryan Beach, CEO of CLS Investments, and I'm joined here by Rusty Vanneman, our Chief Investment Officer. Welcome, Rusty.
Thanks. Good to be here.
So, Rusty, tell us a little bit about the markets for this quarter.
It was a good quarter, another good quarter. The bull market is alive and well. The U.S. market was up about 5% on average. International stocks were about 6% on average. And in particular, emerging market equities are up about 8%. So global equity markets did great. Diversifying asset classes also had a strong quarter. So even though interest rates came up a little bit, the bond market was up about 1% on average. And commodities even stabilized, were up about 3% last quarter. So a good quarter.
Great. How did CLS take advantage of that market outlook?
I think the story's even better. Since we are a globally diversified asset allocator, we benefited from all of those asset classes doing well. So in absolute terms, returns are positive. That's great. And in relative terms, performance was really strong last quarter. No complaints.
Perfect. So with that quarter behind us, what are you guys looking into for the fourth quarter of this year?
Good question. So 2 interviews coming up. The first interview is with Josh Jenkins. We're going to go over the CLS investment themes, what they are, what they mean, how we're building portfolios around them, and how it's benefited performance. So that should be a good interview. And the second interview is with Grant Engelbart, and we're going to be talking about an asset class which has been pretty beat up, which we think is very interesting. Let's talk about what worked and what didn't work in the third quarter, both for the markets and for CLS portfolios. As for what worked in the third quarter, within the stock market, it was emerging markets, technology, energy, and financial services stocks all outperformed. Within fixed income, it was emerging market bonds, high-yield bonds, and investment-grade corporate bonds. Within alternative and real assets, it was the agricultural commodities that outperformed. Now for CLS portfolios within the stock market are overweight to the financial services sector and are overweight to emerging markets. Within fixed income, our exposure to emerging market bonds, high-yield bonds, and investment-grade corporate bonds also helped. As for what didn't work in the third quarter, let's first look at what did not work in the markets. Within the stock market, it was mid-cap companies, real estate, and telecom stocks that did not perform as well as other sectors. Within fixed income, it was TIPS, short-duration bonds, and securitized debt. And lastly, within alternative and real assets, it was precious metals. For CLS portfolios in the stock market, our exposure to Japanese equities and exposure to the telecom sector did not help, while in fixed income, it was TIPS and short duration did not help performance. Lastly, within alternatives and real assets, our small exposure to preferred stocks did not help performance.
One of the keys to understanding CLS's investment methodology is understanding what our investment themes are. Mm-hmm. And with that quarter behind us, I think it's a good opportunity for us to look at those investment themes again. So absolutely. Josh Jenkins, one of our senior portfolio managers, is here to walk us through the CLS investment themes and how they're being implemented right now.
I have with me Josh Jenkins here, portfolio manager at CLS, and we're going to talk about the CLS investment themes that we've had in place for a while. So Josh, the first theme is global value. And global value, of course, to us means that we're liking value stocks more than growth stocks, which is a pretty significant change from prior years because we did like growth. Mm-hmm. It also means that we're global investors, so we're looking for value wherever we can find it. So what does that really mean for our portfolios, and what has the impact on performance been for us this year and last quarter?
Right, so different ways that global values impacted our portfolios. We've seen increased exposure to emerging markets. Mm-hmm. So far throughout this year, that's done very well for portfolios. Emerging markets among the best performing asset classes globally. And then we've also added exposure, as you mentioned, to sort of that value factor relative to growth. That hasn't performed as well throughout the entire year, although more recently that's actually started to make a positive impact on portfolios.
Right. And our outlook moving forward is, some of the portfolios have been nibbling on value stocks again recently. They have been buying kind of on that relative weakness, and we're kind of adding into it. And I think it's a theme we've got in place for a while.
Yeah. They're definitely still priced to perform very well moving forward, so it's definitely a spot that we still like.
One thing is our CLS investment themes, they kind of sound like there are themes for the year, and it's kind of the way they're packaged, but they're really not. I mean, we could have these themes in place for many quarters. They could change at like an investment committee meeting on a quarterly basis. But anyway, that theme looks like it's pretty much in place for a while. The second theme is smart beta. And so in this case, we're emphasizing ETFs that are built using factors, smart betas, such as value we just talked about, or it could be momentum or quality. And again, we're an industry leader in the use of smart beta ETFs. So again, the impact on portfolios last quarter and year to date, smart beta theme.
So again, value year to date has not added a ton of value, although more recently has sort of picked up. We've also had a decent amount of exposure to momentum throughout the entire year that has added a positive benefit to portfolios.
And so which factors do we like right now? Which ones are we adding to?
We definitely still like the value factor. Again,
Definitely.
it's priced to have the best returns moving forward. And we also like momentum paired with value. You definitely get a good correlation benefit between the two of those. So those are two factors we still like.
Momentum, that's one of the smart beta ETFs we kind of added to at the beginning of the year, which has definitely benefited portfolios. One of the good trades, many good trades that we've had this year. Okay, let's go to another theme, which is probably the one you have probably one of the largest impacts at CLS for, and that is creative diversification.
Sure.
Again, the way we generally define it is that interest rates are low, but that doesn't mean you still can't add value by actively managing your fixed income and alternative and commodity exposure. So how has creative diversification played out in the portfolios last quarter and year to date?
So credit has done very, very well this year.
Yeah.
And so more recently, we've been pulling away from credit as it's done well. So that's an area where, it has added value. Also, we utilize actively managed within fixed income quite a bit, and active managed funds have generally outperformed.
On that point, we are one of the largest users of actively managed ETFs as well in the industry.
Sure, yeah. And
a lot
those
of them
have
fixed income, right?
Absolutely, and then those have done well this year. So that's definitely been a value add to portfolios.
Yeah, yeah. What about in non-fixed income? So what are we doing in terms of alternatives and commodities? How's that impacted?
So we're utilizing a combination of alternative strategies as well as commodities. Commodities, we think, are one of the most attractive areas in the market. They're priced very cheap. Throughout the year, they have lagged the overall market a little bit, but we still believe that there's going to be a tremendous opportunity within commodities. And then alternative strategies, they're generally there to sort of provide insurance. When you have both the stock and bond market do as well as it has this year, you generally expect those to underperform a little bit. But when you need that diversification, they generally step up for you.
So I got one comment and then one question. So the comment is, and I think you've already kind of captured this, is that I think when it comes to fixed income, a lot of people just want to set it and forget it. They just buy something and they don't really manage it. At CLS, we do, and we made some pretty good decisions. I mean, probably being short duration or having more exposure to shorter maturities probably hasn't helped us over time. But outside of that, we've been pretty active, and some of our moves in credit, as you mentioned, have been pretty aggressive moves, and they've been helping us out. So that's my comment. In terms of the question I have is related to credit is a lot of areas of fixed income have had pretty good runs in terms of relative returns. You manage with Mark Pfeffer one of our highly successful strategies, Active Income X. In terms of that strategy, what about all those different high income areas, those asset classes? What is our view on them, and how's that changed over the course of the year?
Again, just because they've done so well, their price is rising, they're becoming more expensive, and to us, we don't really think we're getting compensated well enough for the risk in a lot of those areas.
Yeah.
So that's where we're really pulling back exposure. We want our fixed income allocations to really diversify, these equity-dominated portfolios. So,
Right.
We're increasing the quality just because of how expensive those other segments have gotten.
Right on, perfect. Well, thanks, Josh.
Thank
Great.
you.
Yeah, thank you. So with me is Grant Engelbart, portfolio manager at CLS Investments, to talk about an asset class which has been really beaten up and we think is really attractive. We've written about it some, but you're really sort of our expert in this area. Tell us about this asset class, which is really interesting to us right now.
Well, that asset class is commodities.
Yeah.
And commodities aren't included in every portfolio that's out there. Your traditional 60-40 usually doesn't really have commodity exposure. But we like to include commodities and some other alternatives for a variety of reasons. Correlations being the biggest one. Adding a low correlation asset class like commodities to a portfolio can enhance returns and reduce risk.
And it is amazing how much commodities can reduce overall portfolio volatility. It always amazes me
Even
how
at a
much
small weight.
It does, absolutely.
Yep. Absolutely. So, that's why we hold them in portfolios, and that's we're actually attracted to that asset class right now.
But I think there's more than just the risk reduction, though. I mean, you had a chart, which I thought was fantastic, that showed, well, I'm not going to steal your thunder. Tell us about the chart you had talking about stocks versus commodities.
Sure. So by certain measures, back to the S&P GSCI's history or commodity index history, stock returns versus commodity returns are at their lowest level ever, or since that commodity return history exists. And so what we see from these levels obviously is a mean reversion potential for commodities to outperform stocks going forward. And so with that and then those other considerations like the benefits of portfolio diversification, inflation hedging, it doesn't make sense for us, to sell out of commodity positions in portfolios at all.
Right.
So,
and as you said, and I've written it recently too. It is like commodities are a little bit like a spice to a portfolio. You don't need a lot to give it a little flavor, but anyway, so
right. And I think it's important to remember diversification inherently works. If everything in your portfolio is up at once, then you may not be as well diversified as you think. And so commodities have been picked on this year because they've lagged, especially lagged the equity market. But we've seen in down weeks this year, which I think is great. There hasn't been many, but there's been double-digit number of down weeks in the global equity market. Commodities have actually outperformed by over 1%.
that's a great point.
So that's a great thing to have in your portfolio, kind of to help mitigate that risk.
And just to reemphasize your point, one of the points you just made there, your portfolio is truly diversified if there's some stuff you own that you're uncomfortable owning.
Yeah, absolutely.
Yeah, I know. Well, thanks, Grant, and we'll talk to you later.
Thanks a lot, Rusty.
Yeah, thank you.
Thank you, Grant, for the interesting outlook on the commodities market. I'm Ryan Beach, CEO of CLS Investments. Thank you for your time, trust in CLS Investments, and thank you to the investment management team at CLS
Thanks,
for
Ryan.
another great quarterly market outlook.
Great. Yeah, thanks.